And let's check in on the trading floor over there at the CME Group and join Brian Tehako of TnT Group. Brian, so what are you expecting the Fed to say on Tuesday?
We're expecting the Fed to keep things basically the same wording. They're not going to move anything on interest rates. Everything should stay status quo. The big thing was on Friday, we had the jobs number, which I think the Fed is really hawking and they're looking at. And the number was a little worse for equities. There wasn't as much job growth as they expected. It came out negative 131, which isn't that bad, but
yeah,
it's still
131,000 jobs lost in July.
Exactly. So with that being said, I don't think it was anything drastic enough that would make them want to change anything in their wording or even in their interest rates or the talk of quantitative easing.
Okay, so let's turn our focus to the technicals on the S&P 500. It looks like there's a ceiling now in place, and it looks like the market is kind of still stuck in a range.
Yeah, you're exactly right. We had 1129.5 in the S&Ps. On Friday, we were really hoping to try to get above that area, but since we can't, it really opens up the downside, and we turned really bearish. And we're basically in a tight range, but we target, if this holds true, down to 1063, which would be a really good, about a 5% correction in the stock market.
Okay, let's talk about retail sales coming out on Friday, and do you think that could actually shake up the markets again?
You know, these numbers just are not coming out as good as people wanted them to. I mean, the big thing too is consumer confidence was so bad. I got to assume retail sales isn't going to come out anything better than what they're expecting. I would assume these numbers are just kind of dripping worse and worse, which kind of puts us still in that bearish mind for equities. And you got to keep on buying treasuries. I mean, that's the key.
Okay, well, at what point do you want to kind of get out of the market when everything really goes really bad? Give me a level on the S&P 500 where you just want to be out of the markets.
About below that 1063. I mean, if you can hold till then, if it holds, we might keep shaking up and down. But, you know, basically after the Friday's number and going into Tuesday and going into the rest of the week, I would not want to be long the stock market.
Okay, thanks very much. Brian Tehako of TnT Group.